From inclusive finance to sustainable economies, Africa is building its future. This is The Sound of Progress, a podcast by FSD Africa. This is Financing Africa's Future.
Welcome to Financing Africa's Future, a podcast by FSD Africa. And today we are quite pleased to be joined by Jemima Gathumi, Lead Programs Financial Markets at FSD Africa. What a pleasure to have you, Jemima.
It's a real pleasure for me, Kara, to be in this conversation talking about our capital markets work, which I'm always excited to talk about.
Yeah, thanks a lot for passing by. And I know the year is quite gone. Half the year is gone, really. What has really kept you busy?
Yeah, you're right. It's been a really busy year. Right now, we are preparing for FSD Africa's engagement at the Africa Climate Summit, where we are planning to showcase some of our capital market development work, and we are looking to show the promise of capital markets for Africa.
All the best with that, and thanks a lot for coming for us to talk about capital markets and the work that you lead in that area. And I know sometimes capital markets, financial markets can get a bit technical. Let's start with the basics. What are capital markets?
Capital markets are financial markets that connect savers and investors with entities that need capital. Savers and investors could be institutional investors like pension funds, insurers, and could also include retail investors like you and I can participate in capital markets. And the entities that need capital could be governments, they could be municipals, they could be corporates that are looking to fund specific projects, and so they issue instruments, debt or equity, so that investors can basically participate in those instruments and provide capital for those opportunities.
FSD Africa has been working in capital markets across Africa for many years, and I've always been keen to know what the organization's vision for capital markets in Africa.
So we see African capital markets as an engine for sustainable growth and for the continent. We see their potential to mobilize local currency, long-term finance for Africa's sustainable priorities. When you look at the continent and where we're going, the continent will have a population of about 2.5 billion people by 2050. And what that means is that creates an unprecedented demand for green infrastructure, for housing, for jobs, for climate resilience in the continent. The scale of financing that's needed to finance those demands is not something that can be met by traditional financing models. And so capital markets come in as a way to finance, provide local currency and long-term capital for the continent. So we need financial markets that are deep, that are efficient, and that are resilient to be able to meet those financing priorities at scale. We believe that Africa's financial transformation hinges on 5 building blocks, and that's policy and regulation, financial market infrastructure, financial institutions, financial products, and knowledge platforms. And so we intervene across the entire spectrum of capital market development, ranging from supporting the development of policies and regulations that can help create the enabling environment for capital markets, from market infrastructure development, and we also support the development of financial products. We support demonstration transactions that can help mobilize private capital, and we also support African governments on sovereign debt management.
How has FSD Africa's interventions deepened African capital markets and enhanced investor confidence?
We, as I mentioned, that we have interventions across the entire spectrum of the capital development space. So on policies and regulations, we've had a long-running project called the African Regulatory Support Program. We've supported over 11 countries on regulatory initiatives, including capital market master plans, incentives, listing rules and requirements that have helped to basically support the development of products like green bonds, gender bonds, and other instruments in the continent. And then on our market infrastructure side, we have supported the development of from scratch, the Ethiopian Securities Exchange and the Ethiopian Central Securities Depository in Ethiopia. And when you think about Ethiopia, those are really game changer innovations that will bring, that basically provide the ability for a big country like Ethiopia to access long-term capital through financial markets. And then on the catalytic transaction side, we have supported over 25 issuers of thematic bond instruments to raise sustainable finance. I think we've mobilized so far a total of $1.7 billion across the continent. And that has basically demonstrates the impact that those kind of instruments can have in financing the continent's priorities. By acting as a neutral facilitator and a catalytic funder, we are able to show investors and issuers what's possible, and therefore we instill confidence in the markets, and so they're able to then leverage the markets for their financing priorities.
Jemima, FSD Africa did publish the Green Bonds Impact Report a while back. What are the findings that really jump out and the things that really make you really happy?
Yeah, we published that report earlier this year. It was a report that showed us that the green bonds market in Africa remains small relative to the global market, less than 1% of the global green bond market volumes. However, really encouraging to see that green bonds in the continent have mobilized about 9.6 billion of finance for the continent. And of course, this remains concentrated in certain African markets. So that's South Africa, Nigeria, Egypt, Morocco, and the issuances that are done by the African Development Bank. But what was really exciting for me to see is that, number one, there's a growing private sector participation in green bonds in Africa, and that's really encouraging and definitely in the right direction. Secondly, the green bonds are actually encouraging and shaping broader market development, from regulatory reform to basically inculcating sustainability thinking amongst issuers. And then we are actually seeing real tangible environmental outcomes from the green bonds. So funded projects are actually delivering greenhouse gas emissions and environmental benefits. So the progress and the impact is real. I would like to just highlight a few notable transactions that were highlighted in the report. One of them is the issuance by Acorn, which is a Kenyan company. That was a green bond that was issued to finance affordable student housing in Kenya. That was exciting in the sense that that's a new asset class, hasn't been done before for affordable student housing in the continent. The ESG reporting on that particular issuance was quite strong. That issuance was done in local currency, which demonstrates that green bonds can be used to mobilize local currency capital for the continent. And then another one that I'd like to highlight is one that was done in Nigeria by North-South Power. What's exciting about that particular one is that this one had credit enhancement. So it was guaranteed by InfraCredit, which is one of the institutions that we have been working very closely with and have supported over the years. And the first issuance by North-South Power for a hydropower project in Nigeria was basically included a credit enhancement to encourage investors to come to the transaction. And that transaction, the bond was 160% oversubscribed, which demonstrates the confidence that was built by the credit enhancement tool. And then secondly, the subsequent issuance by North-South Power didn't need credit enhancement. So that really goes to show that credit enhancements can actually lower the risk for the risk perception of issuers and encourage investors to participate in those issuers. Another transaction that I want to highlight from that report is basically the city of Cape Town has issued different bonds. We have not supported those, but they're important to highlight because they demonstrate the way in which municipals can use these kind of instruments to finance municipal projects and priorities. And that's, I think, that shows that these instruments basically have a wide range of application. And then one thing that came for me from the report is that the need and what we need to do for the future, I think, is the fact that, yes, there is growing appetite for bonds in the continent, but for the ecosystem to actually thrive and for green bonds to actually develop properly, we need to provide the ecosystem support through blended finance structures, credit enhancements, capacity building for issuers, and local currency de-risking to support issuances. That way we'll be able to really build a credible green bond market in the continent.
Me and Jemima, really heartwarming to see the impact arising from this work, be it in the number of issuances that FSD Africa has supported and some that are really happening on the market, following up, the work that FSD Africa does. Quite heartwarming to see that there are actual emissions reductions, as you have said, and even seeing the market building aspect of our work, that some of these instruments that initially do require credit enhancement, the subsequent issuances really may not need that. Jemima, I wanted to ask you, how does FSD Africa measure the impact of its interventions and to really confirm it's moving the needle as far as market building in capital markets is concerned?
Yeah, no, that's a really great question. We take a systems level view. So we look at, we track both outcomes and market level shifts that are happening, right? So we are interested to see that we are mobilizing new capital, new domestic capital, particularly institutional capital. We're interested to see that we are enhancing the resilience of local markets. We're also interested to see that we're building scalable and replicable models. In practical terms, how I think the targets that we set ourselves over the next 5 or 6 years until 2030 are around capital mobilization. So we're looking to mobilize about 10 billion pounds, mostly in local currency. I think 85% in local currency by 2030, and a good number of that, I think about half of it for adaptation, right, for climate adaptation. And then in terms of market systems change, we are looking to support over 80 policies, regulations, and market infrastructure initiatives. And then in terms of institutional building, we're looking to support over 600 institutions with technical assistance and technical support to strengthen institutions across Africa. But most importantly, we are looking to deliver environmental and social impact, and that means we are looking to shift environmental benefits in a positive direction. We are looking to create jobs, and we are looking to ensure that as many Africans as possible have access to basic services.
Wow, quite an ambitious program, I must say. Jemima, I wanted to ask you, Africa requires green growth all across the different sectors of our economy. How can we ensure that there are more green bonds and other sustainable instruments being issued, and we can really build up on the momentum that your work has created?
I think there are some critical enablers that we want to focus on to drive the green bonds market development. One thing that we found when we did our study is that the cost of issuance in Africa is actually quite high. I think the issuance costs about 5% of the deal size in Africa compared to 0.9% in Europe. And so that's a big barrier for issuers coming to market, particularly first-time issuers. And so one of the things that we continue to do is to provide support for verification and certification costs for issuers so that we lower that barrier and encourage market issuers to come to market with green bonds. Another thing that we continue to see as incredibly important is the blended finance. So the use of guarantees and credit enhancements for bonds, as I mentioned earlier, are particularly important for lowering the investor risk perception and encourage investors to participate in these new asset classes. And so we see that as very critical. The other thing that I think is critical is the harmonization of regulations, right? So green taxonomies, incentives, issuance regulations, and listing rules are important to help define what green finance is and to basically encourage some sort of regulatory consistency and certainty and clarity to encourage issuers to come to market. The other thing that remains incredibly important is the capacity building of issuers. And so we have that is issuers, actually investors, and regulators. So we have some initiatives such as the Africa Pensions Supervisors Association, where we support the regulators in the African continent to engage on green finance. We also support the Pan-African Fund Managers Association, which is an association of fund managers in the continent, to be able to support institutional investors on green finance. And then lastly, we think that local currency instruments will continue to be important. I think that FX, foreign currency risk, remains a major barrier for green bonds in Africa, and so we want to use de-risking tools, including FX hedging, de-risking instruments like guarantees, to basically help local green capital more investable.
Looking ahead, 5 years from now, how does success look like in terms of sustaining the momentum again on these sustainable instruments?
We're looking to mobilize 10 billion pounds for the continent, 85% of it in local currency, and for important priorities such as adaptation. So what we want are deep, efficient, and resilient capital markets are capable of mobilizing that kind of capital in the continent. We are looking to see instruments such as green bonds, gender bonds, securitizations, and other instruments that we are working on, moving beyond pilots to becoming more mainstream in the continent so that everyone is actually using them to mobilize capital. We want governments to use them, we want municipals to use them, we want corporates to use these instruments to mobilize the capital that's needed to finance the development agenda in Africa. The other thing that we are hoping to see happening in the next 5 years is a reduction of Africa's cost of capital, whether through increased transparency, through data, use of credit enhancement tools, basically to lower the risk perception of Africa. I think there's a perception that Africa is a risky continent to invest in, and I think many of our interventions have proven that actually that is not necessarily the case, and that there is an investment case for investing in Africa. And so we want that cost of capital to come down through that lowered risk perception of the African continent. Lastly, we want capital markets to actually deliver benefits in the real economy. So we want capital markets to create jobs, we want capital markets to create environmental benefits, we want capital markets to help develop and grow enterprises that do this, create jobs and deliver jobs and incomes for the continent. And we want green bonds, capital markets to be right at the center of all this transformation.
Well done, Jemima. I wish we had more time, but thanks a lot for the work that you and FSD Africa is doing in really deepening capital markets, greening finance, and having real tangible impact in things like job creation. And looking forward to the next conversation.
As we look ahead, I think the responsibility and the opportunity for us are clear. We are motivated, I think, to build capital markets that are bold, they are innovative, and they are inclusive, so that they can meet the scale of financing that's needed for the continent. So looking forward to working with our partners as we have done before. It's a long-term job. These kind of changes don't happen overnight. So I think we continue to work with partners and to work together to develop the capital market so that they are able to actually meet the financing challenge.
It's a long-term game. Yeah. I agree. Well done. Thank you very much.